Good evening, I'm Giuseppe Basile, I'm the Einstein Trader. You can find at the website www.fipstalkertrading.com. I also post regularly on Twitter using the @fipstalker nickname. Good evening, today is Sunday, June the 28th, 2015, and it's 10 minutes to 10 p.m. and I'm recording this video for you in the next 10 minutes. I'm going to give you clear view of what's going on the 13 markets I follow. That includes the majors, Forex major, the S&P 500, dollar index, gold, and I hope this information can be useful to you. If you're interested, I'm also now enrolling for the September Fipstalker Members Coaching Program, and if you're interested, I'll drop a link in below this video and in the newsletter as well. So let's get into it, and let's start from the euro. The euro just gapped out at 5 p.m. today. It gapped down due to the situation in Greece, and when we look at this market, you know that I was looking at this long here, and this long worked well for the timing, and it gave a free risk trade here. Unfortunately, today the market gapped down. The point is that we could see from the inner measure moves that this move higher was not well formed. Indeed, the bulls were not capable of picking this price here above 111.78. So that would be one of the indication that this measure move higher was not well formed, so there was no participation or limited participation by algorithms as well. Anyway, I mean, after the day of Tuesday last week, it was still possible to exit this position with a gain here. So what I'm seeing at the moment is a market that now we will see whether it's going to stop at the all the way halfway back here, and as you can see, the price just stopped there in at the open, and it's not a case that he stopped there, because that's a potential level of participation from algos. So we will see what happens this week. I still believe that this market can move laterally, but of course, you know, the situation in Greece can bring in a lot of emotion and potential participation on the downside. Until price stays above 108.46, a lateral continuation for this market is still possible, with an upward bias besides everything we are hearing. Moving to the S&P 500, this market has been moving in extension, and we saw the weekly support here 1808. It was 1832 in October. This was the October low here, the October call as well. You can go back and review the videos as well, and within that and after that low, we had an extension higher here, the fund participation 1952, and brought price into that first target, and then the market started reacting lower, selling lower. So we have two levels we have to watch. One is the 1987 level, and the other one is the all the way halfway back here, which did not bring price into first target just yet. That would be here above 2135. But it's possible for that level to be retested now, and there was a big huge gap today at the open of the CME futures here, and you saw that huge gap down here of about 95 to 65, so 30 pips. It's possible that part of this gap would be closed today, today actually, the day of Monday, trading day of Monday. And however, you know, as I mentioned also in the last 2 weeks and before, there is this 2025 level that is a potential level of participation higher from algorithms, and if price gets there, you need to be ready to time this this low here. There's also another level 1987, which is looming here below. And it's also a level of potential participation higher from algorithms. Moving to the dollar index, the dollar index have been finding support to a level that was already known to us. There was this 94 level. I mentioned the level a number of times. Let's give a look at what's going on the larger time frame here. We know that in the larger time frame there is this extension chart, and price has been reacting twice. Actually in March, mid of March, and again mid of April here, if you remember in the past. And at the same time, we identified a support level, and that support level comes from a previous high here. It's a high to high, it's an extension. As you can see, this extension has provided support twice. That's the 94 extension, twice mid of May and again mid of June. So at the moment, the market, the dollar index is moving between 101 and 94 here, and until this is resolved, we are not going to know whether the dollar is going to continue its rally or not. What's very possible, it's now testing of the 97.40 level here. Moving to gold, gold has reacted higher as well to the bad news in the euro here. And remember that gold, although there was participation on the short side, gold is still into this large area of potential support here, which would actually start pushing price of gold higher as well. So as you can see, there was a small gap higher here after the market reopened, as you can see here, but that gap is already it's already being closed here. And don't forget that we also had participation on the daily on 12.26, pushing price lower, and we actually also, we also know that there is this pressure here from short that came 2 weeks ago around the 1200 level here. So this market is still on top of a very large area of potential participation higher, still moving lower despite the gap here. So this week I still look for a continuation of the lower here into 1146. Moving to the US dollar versus Japanese yen here, this market it's actually keep moving higher, and we had an extension from 110 to the highs that we saw in December at the end of last year, and that extension played twice, capable of bringing price into 124.61. And look at the sequence of measured move, the way this market continues to move higher, and when we look at the daily, we can clearly see the sequence of measured move here from lows to highs, participation 118.80, bringing price into the first target. And today at the open, today on Sunday at the open of the forex market, we had a retest of the next measured move here. So until price stays above 121.22, there's still a possibility for this market to continue higher. If he comes back, then one level that we could look at deeper reaction, and that would be down into the 118 level. Moving to the euro versus Japanese yen. The euro versus Japanese yen, of course, also gapped down here. We know that on the weekly time frame, this market is actually moving to lower price. If you didn't know that, the sequence of measured move higher has failed, so I'm looking for this price to retrace all the way into this 122.11. I've been saying this now since a few months. You can go back and review the charts. Now what happened here is that this market, before gapping down, actually has breached the 140.80, but this could actually be a passed setup, bringing price right into that 122, 120.50 to the 122 level. And what is possible now is that on the daily time frame, this market will actually retrace potentially all the ways into the next measured move here, and that could be a good short opportunity, 137.22. Moving to the pound versus Japanese yen, same situation here, but pound is much the pound versus Japanese yen is much stronger here, and recently we identified an extension higher here. That's the 174.90 level. Price didn't go into the first target just yet, but this market is actually suffering, of course, along with the euro. The pound always kind of follows or tracks the euros, and that's the reason why we're seeing this market down today. But there is, I still see the possibility for a continuation higher into the first target, which is a little bit above here, was not touched just yet. Moving to the pound versus the US dollar, we also had a gap here, but it was quite a much smaller gap, and this market is still in a very good position to get actually into the first target, 161. Of course, I mean, if the euro would get very weak here, obviously the pound would in a way follow, because the US dollar would actually become much stronger also against the pound, and so would push this price lower. But as you can see, 161.07 is still a target, and there is an extension here. Until that breaks, this price is going to be pushed higher by algos. 160.48 is the target of this 156.86 level here. As you can see, tested once, twice, three times now at the open, and if the 156.27 is not pierced on the downside, we're going to see a continuation higher into 160.48 and eventually 161.07. Moving to the Australian dollar here, when we look at the larger time frame, the Australian dollar is within an area of potential support here, which is the lows from the lows in 2001 to highs that we saw in 2011. Very similar move as we had in gold here, with this market moving lower and lower, and eventually testing that 279.27, which is the old way of way back. So potentially on the weekly, this market is bullish. On the daily, this market has been moving into this daily area, 88 daily area of potential resistance, and then an initial extension short here, but price lower initially, and then price went to challenge 278 level and pierced the 78.45 here. 2 pips are good enough for me, so there is a possibility for this market now to re-challenge again the 078 level. New Zealand dollar versus US dollar made a big move lower, and we were tracking this market, as a sequence of extensions, and congrats to those who took the trade here. And then we actually have the next extension that hit the first target here. As you can see, there was some profit taking, and then the market is actually continuing lower. Now we have to put this in perspective here, things in perspective here for this market, because when we look at the weekly, we know we are into that very large area of potential support. Just forget this analysis I made here. This is the sequence of measured move on a previous move lower. That's what I teach to my students in the Fibstalker Methods coaching program. And as you can see here, now we are at 068 level here, and that's that's where things get interesting. And we had an anchor that we were able to identify after the fact, but then this anchor came into play again, as you can see here, and progressing to the first target. So if the market does not continue lower, there are two ways we can see. We can look at this market, of course, on a very large time frame, on the weekly time frame, the confirmation of new longs would only come at 77.31, but that's not useful. And we can use on the weekly time frame, and that corresponds to daily time frame as well. We can use this lows to lows to identify when the participation on the upside will be enough to actually demonstrate that the participation from the longs is stronger than the participation that we have seen from shorts in the last few days and weeks. Moving to US dollar versus Canadian dollar, this market, when we go back to the weekly, someone has asked me to review the weekly as well. When we look at the weekly here, and I'm going to remove this, we see that there's a large measure move that I traced from highs to lows. That is important. It's always a level of potential participation from algorithms and a level to time. He was actually participated a number of times in 2008 and 2009, and now we know that at the beginning of this year, January, and then again in March and then April, this market was retested this level was retested a number of times. So there is actually participation on the short from algos on the weekly time frame. Those algos do not want for the US dollar to actually appreciate too much when compared to the Canadian dollar, and of course Canadian dollar has all the interest to keep pushing keep pushing actually the Canadian dollar lower, so keep pushing this higher, so that exports from Canada to US, which are 20% of the economy of Canada, would be actually more convenient. So there is a battle here, and on the other hand, on the long side, we have an extension that was identified time ago, and is still in place here, is still containing this price. So we can see the full story here in this market just by looking at the weekly, and see how 120.52 is containing price, and on the long side, on the short side, 126.50 level is containing price on the short side. So what I see here from this non-well-formed price structure is that possibly as soon as price gets, and if price gets into 126.50, we're going to see another move lower. Moving to the euro versus the Canadian dollar, this is also another very good, interesting market, and we know that there was a very nice sequence of measure move here until the market started moving in extension, and initially those extension could actually capture the market very, very well. Then the market started moving with these huge spikes here, and at some point there was still the possibility to model this market in extension. Eventually this market broke all the way halfway back, and so we were looking for, as you can see here, so this market is actually in a way it's doomed to somehow retest the lows here. What I was looking for was a retest of all the way halfway back short here in order to short this market, but the market could not make it there, at least not yet, because of today gap down here, which affected also the euro versus the Canadian dollar, obviously. And when I trace from lows to highs, again the reaction here is happening within this area of potential participation higher, and we don't know whether the 134.58 is going to be pierced or not. Don't make any assumptions, because anything can happen. With the situation in Greece as well, we don't know that, but anything can happen actually. So I always recommend not to make any assumption about the market. Finally, I want to close with the US dollar versus the Swiss franc here. We saw this huge swing due to the change, policy change for the Swiss franc, which was initially until the mid of January here was back to the euro, and then overnight that peg was removed. Another nice move from the Swiss bank, which is not being trusted anymore as before. So they lost all credibility, of course, but as traders. I mean, a lot of traders get caught here, and but if you are following the sequence of measured move, you would have exited at the second target here, and the next measured move was never actually tested because the market just opened way below that level that we were watching, the 1 and 29 here. So what's happening recently here in this market is that this market is going eventually to retest the 086.61. That's what was the market is was this market is telling us, and the next level is going to be retested again. Is the 94.70 level here, which a potential continuation lower into the first and second target. It's also possible for this market to come back all the way into the all the way halfway back 096. If that happens, it's even a better opportunity to get into this short. And this is it for today review. I hope you enjoyed this review. My apologies if I didn't send this last week. I'm actually busy writing my 4th research paper for the International Federation of Technical Analysts Italian chapter, and it's a very interesting study that supports my intraday fib stalking system. And if you're interested, you can actually go to my website. Here is the www.fibstalkertrading.com, and you can review what I have there. And if you're interested in the FibStalker Emerald Coaching Program, let me know and I can give you additional information. Thank you very much for watching, and have a great trading week. Bye bye now.